got married, we both are used to doing our own thing, he has a checking account, she has a checking account. Do we begin to merge those things? Depends on if it's a first marriage or a second marriage, right? I mean, that's a legitimate, let's be realistic for a minute, that's a legitimate concern. Again, it's one of those things where I don't want to speak in such generalities because I just don't think that that ever works. But, you know, it's like, I have my own checking and savings, and he has his own checking and savings. So, do we begin to combine those things, or do we continue to say, look, out of this account we pay these bills, out of this account we pay these bills, and maybe we create a joint savings account that every month we both contribute to? I have lots of clients that set their life up this way. Typically works better if both people make about the same amount of money. Because if they both make $100,000 a year and they kind of split the bills down the middle and they both pay about the same amount every month and they both save about the same amount every month, life is really easy. But what happens when she makes $250,000 and he makes $75,000 is all the expenses come out of one, and then the other person has all the savings, and then it's like, well, I pay all the bills, well, I collected all this money. And then when the divorce falls out, then you wonder who gets the house and who gets the money and all that good stuff. So Texas is a community property state. This is important to note. There are only 7 community property states in the U.S. So when you get married in the state of Texas, what is yours is his and what is his is yours. Doesn't matter if you commingle it in an account or not. The only exceptions to that are anything listed in a prenuptial agreement or physical property that you brought into the relationship. So if you own a house and he doesn't, and you get married, the house still belongs to you, technically. Even though in a real sloppy divorce, a good divorce attorney is going to find a way for you to end up paying that person for you to keep your house. Texas is a community property state. So just assume that everything you brought into the relationship, both good and bad, debt and assets, becomes the other person's, and vice versa. So while we both have our individual checking accounts, so it's you know, we work that way. Well, guess what? If a divorce actually happened and they want to get real snippy about it, we'll just add up what's in his accounts and add up what's yours in account and draw a line down the middle, or start the bartering arrangement to see who's actually going to get what. Because in a community property state, you know, that's just the way it is. That's why California is one of the 7 community property states. Usually shocks people because it's like, wait, 2 big millionaire movie stars get married, and then Jennifer and Brad break up, and it's not really that big a deal. You cannot imagine how much they paid an attorney to write all of those things out ahead of time to make sure when a divorce happens that what originally was Brad's goes with Brad and what was originally Jennifer's goes with Jennifer. So in Texas, community property state, whether you make it joint or not, the state considers it joint.